600 a.m. Pacific Standard Time. The contagion in Europe is definitely setting in. MF Global is going down. There's lots of things going on. Price line, this is the gap open down list, and we did not get any kind of retracement. The CAC, the DAC, and the FTSE and the European markets, I got the DAC down 5.4%, the CAC is down 4.8%, the FTSE is down 3.2%. That's where these big drops are coming in our futures. The Dow futures are down like 226 handles right now in pre-market. S&P is down 3650 handles, and the futures market down 2.92% to 1212. Dow futures are down 228, down 1.92% to 11668. And the NASDAQ futures, where all of these gap downs are coming from, like the price lines and the MicroStrategies and the Googles, they don't have anything to do with Europe now. But it's artificial. When the futures are down that big, these are the kind of gap downs that we get, and the list is going on and on and on. And it's been our experience when you see 1.00 and you almost have the whole NASDAQ gapping down, there is some kind of redemption. We talked about this big bull rally that we had in October, that it would come to an end, and that once you get a bull rally going, that even on the first day reversal that we said yesterday, you get a counter trend to a lower high, and then that's when you start squaring off. What's going to happen is the European worries have rattled the market so bad, and with the MF Global, allegedly, when I say MF Global, I'm using the word allegedly millions of dollars are potentially missing of consumer assets. Hey, that's stealing. And the thing about it is, right now, the DAC is down 365 handles. So that's where our futures and what's going on. And remember that the Greece are a little bit like, well, maybe we shouldn't want to approve it. So what led the markets higher and the short squeeze is that within the way that the weekly charts had turned around, they had turned from bear to almost bull, well, closing 4 weeks above the 10-week moving averages. On the flip side of the gap open up today, we've got very little. VRUS and then again SQQ. The bears got deeply oversold. The VIX and the VXN, the fear indicators, are going to break out to all-time highs again, well above the 30 level. So the complacency didn't last but a day. And then we have the gap open down with the European worries on the second day of the reversal of the move. What we will be looking at is where does a good quality fundamental stocks, the U.S. fund managers who have still underperformed the broader markets, are they going to come in the month of November and try to buy these dips that we see happening here. I will be giving orders out on Google again, that TQQ, that Baidu, the stocks that gap down are always buyable as long as there's not a redemption liquidation. And MF Global owns securities and futures and lots of things. And so if there's any big unwinding in equities outside of the contagion fear that's a rollover in here, is that we're going to be monitoring that and talking to some of the trading desks around the country to make sure that that's not in play when we go to buy. Look, at everything is buyable and there'll be a move off the bottom. There isn't any reason for the bull right now to come off the sideline. So therefore, we're going to reevaluate the whole volatility aspect of this left elbow gap down, and then how to get entries off that bottom and take these profits. Once again, there's an all-out bear reversal. It's here, it's now, and it's the second day. And generally within great bull cycles that you had in the previous month, you do come down, you do bounce to lower highs. Just like any bull run, they have their reversals as well. But there was no mercy with this left elbow gap down to get that trade, as they normally would happen 95% of the time in trends. The other thing that faces the market is some people were taking profits from the October area. Then the people who never did get out, that were killed throughout the summer of 2011, then you have that in the tape. Well, here, let me get out now. Let me get out now. So you got two kinds of selling. One could be forced liquidation. The other two types of selling is one would be profit taking. The third type of selling would be, well, here, now let me get out that we got this big move. And this is all going to be that short-term volatility on November 1 of 211.